Hey guys, there's a saying that we've been using recently. It's marry the house, date the rate. I'll tell you all about it in today's episode. Hey guys, it's Michael Saldana with the Amanda Vang team. I've got a great real estate market update to share with you today. We're going to be covering the cities of San Jose, Sunnyvale, Santa Clara, and Campbell. The saying goes, marry the house but date the rate. What that means is that when you buy your house, you're going to live in it for many years to come, or maybe not too many years. But with the rate, I know interest rates might seem like they're kind of high right now, but what will happen is when the economy fixes itself, maybe it'll be next year, maybe the year after, compared to a 30-year loan, that's not a lot of time. But once the rates come back down, you'll be able to refinance, you'll have equity in your home, you'll lower your monthly payments, you'll have a nice term on your loan, and a beautiful home to enjoy. Right now is an opportune time to be in the market for buying, or maybe you're thinking about upgrading. You've been living in your home for a couple of years and it's time for something a little bit bigger, something with more room, something that lets you work from home more comfortably. Now is the perfect time. Why? Is because we're seeing median days on market are high across the board. We're not seeing 7 or 14 days median days on market. What that means is that it used to take 7 or 14 days for a home to sell once it was posted publicly. Now we're seeing 21, 28 days or more for a home to sell. Inventory is also very close to its annual high level. And what that means for you as a buyer is that there is opportunity. 40% of sellers or more in some of our areas are reducing their home prices. You're not going to have a lot of competition, except maybe Sunnyvale, which is always a very competitive market. But case in point, we just helped a buyer buy a new home, single-family home in Sunnyvale. It is beautiful. It fits everything that they need. It is less than a mile away from downtown. And when the time comes, they'll be able to refinance into a much lower monthly payment. They'll have some equity and everyone will be happy. No regrets at all. All right, getting started with San Jose single-family homes. Median list price is $1.578 million. Median days on market is 35. That's great. Earlier this year, January, February timeframe was 7 to 14 days. Homes are flying off the shelves. Price decrease is 44%. That means 44% of sellers that are selling their homes are decreasing their price, trying to find buyers, trying to sell their home and move on to the next stage of their life. Don't miss this opportunity. If you're thinking about buying or upgrading, now would be a great time to start thinking about that. Get in touch with us today. All right, next up, inventory 417. It's already starting to rapidly decrease. When you look at this inventory graph, the peak of inventory we saw back in July, and following our yearly cycle, going into the winter, inventory will go down. Just like last year, we saw the bottom of the lease inventory available around the December, January timeframe. By that time, with less homes on the market, there will be more competition. Hopefully prices will be higher. Hopefully interest rates will be better. We'll see how that all goes. Taking a look at our market segments. The bottom quartile is the bottom 25% of homes. The median price is $1.1 million. That'll get you 3 bedrooms, 2 bathrooms, about 1,300 square feet. A very nice starter home. 1.4 million gets you about 1,780 square feet. 4 bedrooms, 2 bathrooms. Next level, 1.7 million, 1,900 square feet, very comfortable. 4 bedrooms, 3 bathrooms. And at the top end, 2.6 million, that's a big home, 2,600 square feet, 8 to 10,000 lot size, so you'll have a huge backyard, tons of room, 4 bedrooms, 3 bathrooms. One thing that I can see is that the absorption is a lot higher than the new homes listed on the market. As I said, inventory is rapidly decreasing, so don't miss this opportunity. I think just like last year, things are gonna get pretty competitive in the December, January, February timeframe. If you look at it last year, it was right around December, January, where we saw our lowest inventory levels of the year. So don't miss this opportunity right now. Next up, we have San Jose condominiums and townhomes. Median list price, $798,000. Median days on market, 32. Also a very good number. It was 7 to 14 earlier this year. 40% price decrease. That means 40% of the homes on the market 40% of the sellers, they are reducing their prices to capture more buyers to try and sell their homes quicker so they can move on to the next stage of their lives. Inventory is at 210. We are not seeing quite the rapid decrease that we're seeing with single-family homes, but I think that we'll see this trend continue into the winter. Just like with single-family homes, they saw the lowest inventory levels in the late December to January timeframe. That's when competition will start to heat up. There'll be more bids on houses since there are less houses available. Ideally, interest rates will be a little bit better, which might bring more buyers back into the market. Taking a look at the market quartiles, $520,000 will get you about 849 square feet, 2 bedrooms, 1 bathroom. $719,000 gets you about 1,000 square feet, 2 bedrooms, 2 bathrooms. That's good for rentals and long-term value. $899,000, that's a little over 1,300 square feet, very comfortable, 2 bedrooms, 2 bathrooms. And at the top end, $1.185 million, that'll be for a fairly new home. Might be very nice, might be a townhome, one of the new townhomes by KB or Pulte, a couple of years old, 3 bedrooms, 3 bathrooms, very nice. All right, next up we have Sunnyvale, single-family homes. Typically, this is the most competitive market. Median list price, $2.398 million. 21 median days on market, so I think this will probably be the lowest median days on market that we'll see today. Like I said, Sunnyvale is typically the most competitive. It's not a huge city. There's not a lot of homes available, but it's also one of the closest cities to the major tech centers and all the big companies, so there's a little more demand. Commute is very short from there, so a lot of people want to live there. Plus, Sunnyvale downtown is a great place to go walking and enjoy your time. Price decrease of 35%, a little bit lower than San Jose, but still very significant. A lot of sellers are reducing their prices to try and capture more buyers. Looking at inventory, we are at 37. Taking a closer look at the inventory graph, we're actually still pretty close to the high inventory mark for the year of 40, which is actually still not a lot of homes available. So in general, competition is always pretty high. Taking a look at the market segments, $1.5 million will get you a 1,300 square foot home, 3 bedrooms, 2 bathrooms, a very decent home, if I might say so myself. Next up, we've got $2 million for a 1,600 square foot home, 3 bedrooms, 3 bathrooms, very comfortable. $2.49 million will get you an 1,800 square foot home, 4 bedrooms, 3 bathrooms, that's pretty big there. And $2.9, almost $3 million, that will get you a 2,300 square foot home, huge by our standards. 4 bedrooms, 4 bathrooms, plenty of room for everything that you need. Next up, we have Sunnyvale Condominiums and Townhomes. Median list price is $1.048 million. Median days on market is 21 as well. Still pretty competitive. However, we're seeing 38 price decreases, so sellers are still willing to reduce their prices and work with buyers. Inventory is 32. We can see that inventory is significantly lower than the peak, but the peak is just about 46 homes. So we're kind of at that midpoint. Taking a look at the market quartiles, $732,000 will get you an 860 square foot home, 2 bedrooms, 1 bathroom. $869,000 will get you 1,126 square feet, 2 bedrooms, 2 bathrooms, a very decent condominium or townhome. $1.2 million will get you a little over 1,300 square feet, 2 bedrooms and 3 bathrooms. That might be a townhome, it's like a 3-level townhome. Maybe there's a bathroom and an office space on the first floor. Now, the office, if it doesn't have a closet, technically it's not counted as an actual bedroom, but it's still a very usable space, especially for our times now when maybe both people living in the home are working from home. It's nice to have a little bit extra room. Next up, for the top quartile, $1.5 million. That'll get you something that's significantly newer, about 13 years old. 1,700 square feet, 3 bedrooms, 3 bathrooms. Now that can be either 3 bedrooms on the top floor, maybe 1 bedroom on the first floor, 2 bedrooms on the top floor, or maybe 1 bedroom on the second floor, 2 bedrooms on the third floor. Very nice home. Next up, we've got Santa Clara, single family homes. Median list price is $1.8 million. We're seeing about 21 median days on market, so it's just about as competitive as Sunnyvale. Only 15% price decreases. So in the past few months, we've been seeing the Santa Clara market and the Sunnyvale market kind of going toe-to-toe, but it's nice to see that there's only 15% price decrease in Santa Clara. That means there's a little bit more competition. Sellers aren't as willing to reduce their prices. That's probably evidenced by this inventory of 33. Let's take a closer look at that number. This dark line is the 90-day moving average. That moves a little slower, but this dotted line, that's going to be the 7-day moving average. So we can see actually there's been a lot of buyer activity in Santa Clara recently. So there's been kind of a spike. We had as few as 25 homes for sale. That's actually very close. Let's see, our lowest point last year was about 17 homes for sale. So the market was pretty tight, pretty limited. That's probably why there were less price decreases. Taking a look at the market segments, $1.5 million will get you a 1,500 square foot home, 3 bedrooms, 2 bathrooms. 1.79 million will get you a 1,700 square foot home, 3 bedrooms, 2 bathrooms. 1.98 million will get you around the same size, 1,780 square feet, 3 bedrooms and 3 bathrooms. And then at the top end, 2.2 million will get you a 1,600 square foot home, 3 bedrooms, 2 bathrooms. Now, because the market's a little bit smaller in this area, maybe that's why the statistics are skewed a little bit. But homes can always differ when you look at them. It's not all about the square footage. A lot of times it's about location and the condition of the home as well. Next up, we've got Santa Clara condominiums and townhomes. We're seeing a median list price of $779,000. Median days on market of 32, so it's moving a little bit slower than single family homes. That's always pretty typical. 23% price decrease, so a little bit higher than what we're seeing with single family homes, but normally condominiums and townhomes are a little bit less desirable than single family homes, a little bit less competitive as well. Inventory is 22, so there's not a lot of homes on the market. And wow, if you look at this inventory graph, we're very close to some of the lowest numbers that we see over the year. We've got about 22 homes on market right now, and last year our low point was about 12 homes on the market. So not a huge market either. Looking at the market segments, $600,000 will get you 788 square feet, 1 bedroom, 1 bathroom. $744,000 will get you 991 square feet, 2 bedrooms, 1.5 bathrooms, a very livable home. $998,000 will get you about 1,300 square feet, 3 bedrooms, 3 bathrooms, and $1.498 million will get you a pretty big condominium or townhome at 1,894 square feet, 3 bedrooms, 3 bathrooms. Most typically, that'll be a tri-level home, new construction. With an age of 0, that's actually almost all probably new construction homes. So it'll be brand new. There's a little bit of a price premium that you pay, but the nice thing about homes as opposed to cars, when you buy a home, it doesn't depreciate. Actually, it increases in value. All right, last but not least, Campbell, single family homes. Median list price of $1.99 million. Median days on market of 21, so actually still pretty competitive here. 33% price decreases, so that means there's actually still a lot of sellers that are decreasing their price to capture more buyers. Inventory of 21, so it's pretty competitive. Let's see how that looks. Now, Campbell actually had kind of a high peak this year, but as you can see, inventory levels are rapidly decreasing. Taking a look at the market segments, 1.49 million will get you a 1,300 square foot home, 3 bedrooms, 2 bathrooms, very nice home. 1.9 million will get you 1,800 square feet, 4 bedrooms, 2 bathrooms. 2.29 million will get you more than 2,100 square feet with an 8,000 to 10,000 square foot lot. So you've got a big backyard, plenty of room to build something like maybe an ADU, who knows? 3 bedrooms, 3 bathrooms. 2.83 million will get you about 2,400 square feet, 4 bedrooms and 3 bathrooms. All right, now looking at Campbell, condominiums and townhomes, our median list price is $918,000. Median days on market 25, so pretty low, but not too high. 50% price decrease, so still a lot of sellers reducing their prices, trying to capture buyers. Inventory of just 8, so Campbell has always been kind of a smaller market than the other ones, but you can see with an inventory of just 8, it's still a pretty low level, especially compared to some of our past years. 2020, there's 24, 27 homes on market. We had up to 34 homes on the market last year, so very interesting. Market segments, bottom quartile, $627,000 will get you 829 square feet, 1 bedroom, 1.5 bathrooms. $874,000 gets you 1,150 square feet, 2 bedrooms, 2 bathrooms. $974,000 gets you about 1,274 square feet, 2 bedrooms, 3 bathrooms. So that'll have that office or usable space in the first office with a bathroom on the first floor, typically. 1.44 million will get you 1,600 square feet. 3 bedrooms, 3 bathrooms, that's gonna be only about 12 years old. So maybe a new construction that's been lived in, hopefully one owner, ready to move in and ready for you to enjoy. All right, guys, thanks for joining me today. I hope you enjoyed this month's market update. There are a lot of things changing in the real estate market. We are coming off of our high inventory levels for the year, which means things are about to get a little bit more competitive. So if you've been thinking about buying, maybe you've been thinking about upgrading from your starter home to something a little bit bigger, don't be afraid of high interest rates. As you can see, there's a lot of sellers that are reducing their prices to try and capture more buyers. What that means for you as a buyer is that you'll have some room for negotiation. Maybe you can ask the seller to fix a couple things in the home before they sell it to you. Maybe you can ask them to reduce their price. You know, what we are as agents saying right now, trying to sell homes, just bring your best offer. Don't worry about the list price. Send us an offer that you are comfortable with and we will work on it from there. Sellers, a lot of times they need to sell their homes because they're moving, maybe they have a new job, maybe they're trying to upgrade their home or get into a different school district, get closer to work because work from home ended, you know. So a lot of times sellers have timelines that they need to work on. So as a buyer, maybe you can take advantage of that. And the same thing applies if you're thinking about upgrading your home. Don't worry about trying to get the highest price or getting the most competition. You know, right now it's actually a pretty balanced market. So if you're thinking about selling and then you need to buy right afterwards, now is not a bad time to start thinking about that. Don't worry about the interest rates. You know, one of two things are gonna happen. They're either gonna go up because the world's gonna have more problems than it has, or they're gonna go down because we're gonna figure everything out. You know, I can tell you that all the supply chain problems that people were talking about earlier this year, they seem to be working out. Part of that is I think demand is a little bit lower for all the things that we need, but as a result, you know, people have everything that they need to do their jobs, to deliver their products. So as a result, you know, the home industry, I think we're going to see some growth. We're going to see some competition. We're going to see more homes coming to the market. We're going to see interest rates go down, and it's going to be a good time to either buy or sell if you've been thinking about that. All right, well, thanks for staying tuned until the end. This is Michael Saldana with the Amanda Vang team signing out. Have a good month, guys. Bye.